The standoff between traders and commercial banks began late last year after the central bank raised its lending rate to commercial banks from 20% in October to 23% now. The banks responded by raising the interest payable on loans to as high as 30% or even more. But some traders signed contracts with commercial banks that indicated that the loans were variable, which means any adjustments in the interest rates by the central bank affects even the payment regimes of existing loans. But economic analysts argue that the central bank, as a supervising body, should have advised the commercial banks to charge the new interest rates on only new loans.
And then the bank would have an instrument to use called moral suasion. They could persuade the commercial banks to focus or to charge this new interest rate on the new loans and not on the existing loans, so that you allow actually people to make decisions based on the prevailing circumstances.
In more developed countries, loan borrowers are given options of taking loans on either fixed borrowing rates or the variable lending rates. But here, where the system is based on variable interest rates, people are left with no option. Now, a senior economist at Makerere, Dr. Eriya Hisali, is advising that if the central bank does not reduce the interest rate now going at 23%, food prices may soar.
Given the high cost of borrowing and given the high cost of servicing the existing loans, the traders will not quickly adjust the prices downwards, because they are going to justify their actions by the increased cost of borrowing and the high cost of rent and the high cost of servicing the existing loans.
The economist Don says the central bank must call for calm by eyeing the current improvements in agriculture as cause to a downward inflation.
We think that as the inflation eases, as we begin seeing some easing, the central bank should act fast and adjust the central bank rate downwards, in the hope that the commercial banks will follow suit.
Dr. Hisali is optimistic that if a boom in food supplies continues, then the central bank should adjust the lending rates downwards. Isabel Nakiria, NTV.